Hi everybody, welcome to the Baguette Investor channel for a new weekly video. First thing we do in those weekly videos is that we look at my weekly performance. You can see there is still nothing interesting to say. The most interesting thing to say is that I'm able to keep the gains that I made. This is one of the hardest thing in trading. It's not to make the gains, but it's to hold the gains and not make new losing trades. So I did make some losing trades this week, but also made some winning trades, and I'm able to maintain my profits at a normal size. I have very little amount of profits. I'm only 1,000 euros of profits this year, which is not enough, absolutely. But considering the look of the market, it's a freaking miracle. So we're gonna go deeper into how the market looks. And spoiler, everything looks like total shit right now. Like it's terrible. Everything looks bad. And the most worst thing right now is bonds. So if you don't know, the bond market is very simple. The rates related to the bond move in the opposite direction of with the price. So if the risk increases on your bond, it means people are going to ask for a higher interest rate. Higher interest rates thus mean lower bond prices. If you're okay with me, you see here the U.S. government bond for 10 years. So it's the rate you're going to pay each year for 10 years. You see that it is in a big secular downtrend. Since the 80s, the rate is in a downtrend. We're going to zoom in a little bit on the weekly. You could see that it's in a big range, but right now we're in a very interesting period where it has a sharp move. Zoom in again on the daily. You can see now that since the COVID recession, so COVID recession is here, the lockdowns and all this stuff is here, and after that you have the stimulus, so stimulus period over here, and after that you got the start of inflation. And as the inflation risk becomes more and more true, you see the 10-year yield of the US government is at 2.75, which is never seen since December 18. So very important to see that. It means that investors are selling their bonds. You look at the bond ETF, the Vanguard bond ETF, which is basically a package of all the bonds you could have on the US markets that give you an idea. It would act like a bond index. It's getting absolutely destroyed since August 20. The TLT, which is the long-term bond for the US government, is also getting absolutely destroyed. The IEF, which is the, let's say, midterm, which is 7 to 10 years, is getting absolutely destroyed. You look at European bonds, they are also looking absolutely destroyed. This is the Eurobond. The bond is the name investors give to the German 10-year bond. And you can see, same for, this is priced in euros, not in dollars. This is very important data. We're going to look at why after that. Priced in euros, you can see it's in a massive uptrend, and now it's starting to in a corrective phase. Of course, if you look at the monthly, it's not in a bear market. It's starting to look like a bear market, but you cannot just see that one impulsion becomes a bear market. However, it's very important to see that right now European investors are getting destroyed because the rates are very low and the price of their bonds are getting destroyed. So it's not a good time to be a European right now. So when I told you bond prices matter by themselves, they also matter in terms of their currency because they're priced in a currency. And you get 1 to 2% interest rate on your bond, but that also matters with the currency. So if you look at the Bund, the German 10-year bond in terms of dollars instead of euros, you could see that it looks much different on the same time frame. The bull trend is not as powerful. Why? Because euro dollar went down during the period of the bond appreciating. Why that? Because the ECB just prints euros, and by printing more euros, it devaluates the currency in different kind of ways that I don't have time to talk about right now. What you should just know is that since October 13, you're not making money on the price of your bonds. Right now, you're down at the price we were back in 16, 17. So that's it. Bonds are very bad right now. And that means that people don't even buy bonds. So people say bonds and stocks are equally, well, are oppositely correlated. When bonds go down, stocks go up, and oppositely. Well, doesn't work like that. Right now, we're seeing stocks not doing anything, started again, trying to make a top right there. The Nasdaq is looking the worst index during these times. Even Canada struggles to hold the levels. It does hold, but not as there is not that much strength overall in the markets all over the world. And the worst markets are basically the European markets that look like this in euros. But if you it's not WBC, it's LWQ. Yeah, it's LWQ. If you look at this in terms of dollars, the European markets look just bad, and they just got rejected over the resistance right there. And as long as we don't reclaim there, we are now in a correction for European equities. So bonds look like shit, stocks looks like shit. Where is the money going? Like, for real, like, where does the money go? Well, that money doesn't go into crypto either, because crypto failed to hold the breakout. So the money does not go into bonds, does not go into stocks, does not go into cryptos. Oil is finally starting to correct, but that means that money is not even going to oil. Where is money going? Well, it might be going to cash, because as you can see, the dollar is really strong. It's the strongest it's ever been since May 2020, so right before the COVID crash, and it's like heading to the top of the range, in my opinion. Pay real attention to the dollar index, because it really shows you how things are going to be. The euro currency, I'm going to look at a better chart that I have, which is on another exchange. There we go. You have this big, what do you call it? Pattern right there that I don't know what you call the holy triangle. What matters to me is that this level, in my opinion, is very important, and that if we break down here, this would be a strong technical signal. Of course, you need to think about the fundamentals on stuff like that, and the fundamental for the euro is very, very, very bad, but I'm not good at fundamentals. Well, I try to be good, but I don't claim to be any good. So I'm really paying attention to this level right there, and if we start to break this with conviction, I think it can get very, very, very bad for euros, and we might see euro getting back to where it was when it was created, so back to 0.88, and that's totally possible. Like, we might see a euro at 0.85 in like 1 or 2 years. This is totally possible. Look how fast it depreciated back in 2014-15 during the euro crisis, well, the second euro crisis. So this is totally possible. So you have a slight possibility of uptrend is agricultural commodities, which I'm going to use the ETF listed in Milan in Italy. You could see that agricultural commodities are looking quite strong. They're looking stronger than oil commodities or energy commodities, but overall in the markets there is nothing to do. The edge is not on the favor of being long. You could try, like me, to beat the market just for fun, just not to do nothing during these times. I'm trading very small positions, very low risk, very little faith in what I'm doing, but the odds are not with you right now. If you try to buy technology and growth stocks, the odds are completely not with you. The Nasdaq just got hit very strong. If you try to buy value stocks, however, the odds are a little more in your favor, as you can see that value stocks are holding pretty well, but we're nowhere near as a strong uptrend. So right now you would be being very cautious, but you can see it's still very choppy, it's only choppy. If you look at smaller companies, well, they just look absolutely terrible, and they're in a range market, and it looks like they're going to get out by the bear side and not the bullish side. So look at EWN, which is Russell 2000 value, and EWO, which is Russell 2000 growth. They look bad. The two look bad. Growth looking the worst. You have still some sectors that look very good and that get some appreciation, but some of them are overextended, like metals and mining, like copper miners, like steel companies, like energy companies, oil and gas, and other companies are Remix. I talked about Remix last week, and it just got destroyed again this week. So yeah, some people look at this as a retest. I don't know. I just see that the uptrend was here, and now it corrected very strong. PPA is aerospace and defense, which is no longer looking very interesting. You got gold miners. Yeah, I forgot to talk about gold. Today we're going to talk about gold, but first I need to talk about agricultural commodities and agricultural stocks. Agricultural related stocks. You got Vanek Agribusiness and MSCI Agriculture Producers. You got many stocks and companies in the agricultural space looking very good. And yeah, of course, inflation means gold is back. So gold is finding some support right there. I was saying I hold quite a lot of gold. In fact, I hold like what 3,000, 4,000 euros of gold right now. I'm planning to buy more. But I was talking about gold back when it broke out right there. You could go back to the channel and check the video. I talk about gold when it broke, this big resistance area right there. And now, because I see it holding, I thought about gold. I told myself if it closes down the support, I'm getting out of my position on gold. And as long as it holds this support, I'm staying in and I will add to my position, because really we only need to break out above the all-time high, I think, to make something really good on gold. It's also very good inflation hedge, because I don't know if you've seen the inflation numbers right now, but it's going completely crazy. So yeah, very difficult to invest right now. Don't beat yourself. Don't try to beat the market. If you're not comfortable and you don't want to play like me, just stay out, take a drink, relax, sit back on your chair and just watch what's happening and wait before a real entry. And real interesting stuff, there is gold to look at, agricultural commodities, but there are going to be entries in the future anyway. And if you want to play, well, just be very cautious and use very small positions, very, very, very small positions, small risk, and precise entries, and select only the best opportunities. Because right now I don't see anything really. There is nothing to do. Like, look at this. The liquidity is being sucked from the markets because investors are really, really afraid. And I think they should be afraid, because everybody thinks a recession is coming in 2023. So be careful out there. Have a nice week. Hope you won't lose as much as others that are getting crushed right now. Thank you so much for watching. See you in the next videos. Goodbye.